Alrighty, so let's talk about market correlation and how you can use correlation in the market to pull a lot of pips out of the FX market. So what is correlation? Simply stated, correlation is when something has a mutual relationship. Now, market correlation refers to when certain pairs move together or trend in the same direction because it has something in common, a currency. In this example, I'm going to show you guys how the major pairs move together, which establishes market correlation. Now, your major pairs that we're going to use, and I'm going to show you how they correlate, are as follows. You have the Euro USD, you have the British Pound USD, the NZD USD, as well as the AUD USD, and then the Euro JPY. Now, these 5 pairs, they move in the same direction once the pairs begin to trend. Okay. Now, the opposite but still correlating pairs, meaning they move in the opposite direction once the pairs begin to trend, is the USD CAD and then the USD Swiss franc. Now, these 7 pairs make up your major pairs, and they usually correlate together either up or down about 80 to 90% of the time. Okay, so we're going to look at the pairs and see how they correlate together. But in addition to seeing how they correlate together, I'm also going to show you guys how you can take trades in all of the pairs. You can take the trades in all of the pairs once the pairs start moving, and I'm going to show you how you can pull hundreds or thousands of pips out of the FX market in a very short period of time because you're trading correlating pairs. Okay, so as you see on the chart, we're on the daily time frame. We're on the daily time frame, and essentially we're going to look at the last 2 weeks of price data. Okay, so we're going to be looking at the last 10 daily candles, right here. Okay, which represents the last 10 trading days. There's 5 trading days in a trading week, so that would be 2 weeks of price data. Okay, so let's count back. Let's see, 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. Okay, so this right here is the first day. Okay, now I'm going to show you this I'm going to show you how these pairs correlate and they move together. I'm going to show you this on the daily time frame, but then when I show you how you can trade it together, I'm going to show you on the 4-hour time frame. Okay, so just to show you the correlation in the market, this is the Euro USD, and here are the pairs that correlate with the Euro USD. First, you have the British Pound USD. You see the Euro USD was going up. Now you see the pound is going the same exact way. It's going up. The NZD USD, the New Zealand dollar USD, it trades the same direction. Then you have the AUD USD. It's also going up in the same direction, as well as the Euro JPY. It also correlates with these pairs. Okay, now like I said, in addition to those pairs correlating, you have the USD CAD and the USD Swiss franc that's also correlating with these pairs, but they are going the opposite direction. So if I show you the USD CAD for the past 2 weeks, it's been going down. So has the USD Swiss franc. Also been going down. Now, what makes these pairs correlate? Because they have a pair in common. All but the Euro JPY, the currency that they have in common is the USD. The USD is responsible for the correlation of all 7 of these pairs. Okay, so keep in mind, guys, and we can look at other parts of the chart, right? So we're still on let's go back to the Euro USD. Let me show you guys again. Let's look at another section of the chart, and I'm using the daily time frame, guys, because the new level setups, we get our signal from the daily time frame. So let's go ahead and look at this section of the chart. Right here is our signal candle right here. It's what gave us the signal to go short. So here is essentially our first day of trading right here. Right, so we would have went short, we would have got into the trade and went short here. So if the Euro USD is going short, right, so should be the GBP USD. Now keep in mind, sometimes they don't all go short right at the same time, but it's around the same time. Once the pair starts to trend, then they all fall in line with the trend. So what I mean is the Euro USD could have went short on Monday. The British Pound USD may have started going short on Tuesday. So it's something, that's what I mean. It's something like that. But as you can see, the Euro USD went short here. So did the British Pound. The NZD USD short. The AUD USD sell. The Euro JPY. Now, okay, so I'm glad this showed up. So the Euro JPY, since it doesn't have the USD as a part of the pair makeup, sometimes it does its own thing. But you know, and what I mean by that, sometimes it has spikes, pullbacks, you know. But as you can see, the pair is still going short, but it, you know, sometimes it has a little resistance on it. So that's like that that 10% of the time when all the pairs don't go short. But even if you was to lose this trade right here, you make it up with these pairs here that always correlate together, right? So if these are going short, then the USD CAD and the USD Swiss franc should be going long, right? Because they're the opposite. It's going long, it's going long right here, okay? All right, so let's look at one more section of the charts, the daily time frame, so you guys can see how often these pairs correlate together. All right, so let's pull it back a little bit. Let's pull back a little bit. Let's go to another year, a big run. Okay. All right. So here, right here, here's your signal. Here's your setup right here. Either here, you could have went shorted here. Let's say we took it short here. That's your short trade. That's your entry right there. Your stop loss would have went up here, but here's the first trading day right here. So let's see. Euro USD, sell. Pound USD, sell. NZD USD, sell. AUD USD, sell. Euro JPY, sell. Okay, so here we go. It took a few days for the Euro JPY. It still has some resistance going on, but eventually it got in line with the rest of the pairs and went short, right? So the USD CAD and the USD Swiss franc should be going the opposite direction. Buy, buy. So there it is, guys. You see how trading these 7 pairs, the major pairs, makes it a little bit easier where you can pull a lot of pips out of the market just by understanding how the market correlates. And again, what makes these pairs correlate? They all include the Euro USD. Some include the Euro USD as the quote. Some pairs include the USD as the base. But depending on if it's the base or the quote, depending on whether or not the USD is strong or weak against the pairs, determines which direction the markets are going to correlate when it comes to the major pairs. All right, so now really quick, let me show you guys how you can trade these pairs and just pick up a lot of pips in the FX market. Now, you always want to be in line with the overall trend, right? How do we check the trend? You go out to a bigger time frame. You can go to the daily time frame, or you can go to the weekly time frame, right? So, but I'm on the daily time frame. So let's find, okay, so let's look at the last 2 weeks. Let's put this line back here. Last 2 weeks. Let's jump on the 4 hour. Why do we use the 4 hour to look at where the weeks, how the week went? Because remember, from this line to that line represents 1 week of price data. From this line to this line was the week that just closed, okay? So let me slide this over a little bit just to be a little bit more accurate. Slide this line over just a little bit. Okay. So bam, how could we use correlation to trade these pairs? All right. So even if you wouldn't have took this first entry right here, you see these pairs are trending up. You see a slight pullback right here, and you would have went long right here. This is not really a new level setup, meaning this pullback isn't deep enough, right? But if you always go down to a smaller time frame, and I haven't looked at this, guys, I am just going with, you know, how I trade. If you go down to a smaller time frame right here, you can always see a deeper new level setup. You can always get more in terms of momentum, in terms of crossing the 20. If you're going up, you can always get a deeper pullback, at least on your oscillators, if you drop down to a smaller time frame. But nevertheless, well, since we're on the 1 hour, let's just stay here. We can do the same thing on the 1 hour. So we got our signal to go long here, right? Let me move this signal to go long right here, based on this candle here. Well, let's move the candle over just a little bit. And our stop loss is behind the low of the previous week when we traded in 1 hour. So you have a 78 pip stop, right? So we trying to make 78 pips the other way, because you guys know I like to take my 1-to-1 risk to reward, right? But in addition to the 78 pips the other way, here's what I could have done. I could have took positions in all of these pairs. I could have blindly just took the positions. And look right here. And I haven't looked at this. I could have went long here. Stop loss behind the low of the previous week. Yeah, price came down, but it never, it kind of probably had me a little nervous. But then price shot up to the upside. So that was a winning trade on the pound USD. Look at the NZD USD. Same thing. Could have went long here. Stop loss behind the low of the previous week. Price shot up to the upside. Could have went long here. Stop loss behind the low of the previous week here. Shot up to the upside. You guys get my point, right? Long here. Shot right up to the upside. Now, the USD CAD, the USD Swiss franc should have been going the opposite direction. Let's see. There it is. Short here. Stop behind the high of the previous week. Or, look at that stop, 230 pips. But 2% is 2%, no matter if it's 100 pips or 500 pips. Straight to the take profit. Same thing here. Could have went short. Well, I wouldn't have went short here because I would have waited for the turnover on the oscillator. But high of the previous week. I'm saying previous week, guys. I mean previous day on the 1 hour. If you're on the 4 hour, it's the high of the previous week. It's the high of the previous day. 38 pips there, 38 pips down, right? So you guys see it right there. So if you take a position and if you take a trade on all of these pairs, 90% of the time you're going to be going in the right direction. It's all about stop loss placement. That's key. That's important. Again, I will tell you my stop loss placements. If I'm trading, if I take the position on the 4 hour time frame, then my stop goes behind the low or high of the previous week. If I'm taking the position on the 1 hour time frame, then my stop goes behind the low or the high of the previous day. Okay, that's what I meant to say, right? But there it is. This is how market correlation works. It works 80 to 90% of the time on these pairs. Now, the cousin of these pairs, the Euro USD, keep in mind, sometimes it acts a little funny, but for the most part, it does move in line with the other other 5 pairs. And then the last 2 pairs, the USD CAD and the USD Swiss franc goes the opposite direction, guys. So that's what it is. That's how markets correlate, guys. If you learned anything from this video, please like the video, share the video, and also subscribe to the page. Maybe I should start saying that in the beginning. Like, share, subscribe. Alrighty, guys. Have a good night.